Well, hello, everybody. Welcome to our webinar today. My name is Jim Codney, National Sales Director here at Western Marketing. Really appreciate you jumping in for this webinar. I think you're really going to like it, especially if you haven't written Mutual of Omaha's life products before or you haven't written them in a while. A few months ago, they made some changes to make the products even easier to write, more client-friendly. We love working with our partners at Mutual of Omaha today. A couple quick housekeeping items. We're here for you. If you have questions, please type them in the chat box. We will do our best to get through all questions before the end of the webinar. If you don't ask questions, this will be relatively quick, but we'd prefer if you have questions, ask them. But just note, if you're asking something that is of a one-off nature, like about a client situation, we'll probably reach out to you individually after the webinar for that. So without further ado, I would like to introduce our presenter, Kurt Williamson. Kurt is the sales director, with Mutual of Omaha. Also on the call is Cindy Burke, account executive with Mutual of Omaha. Kurt and Cindy, welcome.
Yeah, thanks, Jim. Look, it's always good to be on with you and the folks at Western. I mean, you guys do a bang up job without a doubt. Guys, look, Cindy and I are your sales team, right? This is what we do. Both of us, Cindy and myself, have been in this business, 30 years each. So you have some history with us, but you also have an insanely talented group at Western who knows our products probably as well as I do. So when you have things you want to talk about case-wise, by all means, reach out to your managers there, but know that you also have a carrier in your corner that is dedicated to your success. A little quick history on me. I've been, like I said, at this for just about 30. I was an agent for 16, 17 years, had my own company, and then kind of made my way over to Mutual of Omaha here. Cindy has held just about any kind of job between underwriting and sales support and all kinds of stuff. So she's just as talented as anybody I've seen in this industry. So her and I both respect what you guys do, right? We know how hard you work, and quite honestly, you guys know how this works, right? Cindy and I get paid on your hard work, so we better take that to heart, and we do. We try to be as responsive as possible, and that's your success is seriously important, and I don't take that lightly, and I don't think Cindy does either. Cindy, you want to just say hello real quick? She might be muted.
Can you hear me?
Yeah.
Hello.
I can hear you.
Okay, sorry.
No,
I had to
fine.
call in with my phone. Hi, everybody.
Oh, you're fine. So let's get into it. All right, simplified issue, guys. This is supremely important for you. This is a massive, massive market. Just to give you an example of how big this is, the last couple years running, Mutual of Omaha, in and of itself, sold close to $300 million worth of premium in these products. So I'm telling you, there's a market for it. Substantial, without a doubt, and it's growing every day. Being an integrity partner like you guys are, there's a number of groups out there that hit the simplified issue stuff pretty hard. Western is no different, but I think that I can comfortably say that Western does it probably better than most out there because they provide the right support to the agents. So let's get into what the simplified issue portfolio looks like. All right, we have a few different products in here. We're going to run through 4 of them today, which make up the core of what the simplified issue is. All right, you literally shouldn't ever leave a home without a sale. You have the ability to cover people from the ages of 2 weeks up to 89 years, right? 2 weeks old, children's whole life, 89 years, you can do that with the critical advantage. Yeah, that's technically a simplified issue, but the 4 core products we're going to talk about take you out to 85 years, all right? The 4 core products that we're going to talk about are Living Promise, which is our final expense, IUL Express, which is our simplified issue IUL. We were the first ones to come out with that, an IUL in a simplified issue form, so that gives you some serious strength, and Term Life Express. and children's whole life. So those 4 make up the core products. Now we do have the critical advantage and the guaranteed advantage, which is that one of them is that guaranteed advantage is an accidental death policy. That's your backstop for when you have a client that has so many health issues they have nowhere else to go. And obviously critical advantage, you're talking about heart attack, cancer, and stroke policies there. But again, the 4 core that we're going to talk about today: Living Promise, which is our final expense, IUL Express, Term Life Express, and Children's Whole Life. Couple things for you guys. www.mutualofomaha.com/simple has everything you're going to see today. So you don't have to worry about taking a lot of notes. I traditionally don't like reading a lot of slides because as an agent, they used to drive me crazy because I would kind of look at the carrier and be like, well, why didn't you just send me the dang presentation? I didn't need you to be on it. So I want to add a little bit more to it in terms of sales. Look, we're all salespeople. Sales needs to be a service, so that's important. But the basic information for you sits here, right? mutualofomaha.com/simple. If you are appointed with Mutual of Omaha, you have access to our full-blown site, which is mutualofomaha.com/broker. You have to log into that, and then you have access to all your ongoing cases and stuff like that. But for those of you that just want to stick with Simplified issue, just go to the Simple site. It's the best place to start. We do a number of things with our instances. Significant portion of these cases with Simplified issue get issued on the spot or within 24 hours. Sometimes we do refer them to an underwriter. If we get conflicting information from like the Medical Information Bureau and the prescriptions, and maybe the application's got a question answered weird that doesn't really seem to jive with what we're getting, we may refer it to an underwriter. Don't be afraid if that happens. That's actually a good thing. It means we're looking for a reason to issue the policy. So in the Simplified issue world, again, the majority of these policies, somewhere north of 90%, get issued within 24 hours. That's significant for you, and it's significant for your clients. We're going to go through a couple case ideas just to give you in general kind of what this looks like. So in this scenario, we have Maya, 63-year-old female, married, 3 children, 2 grandchildren, no mortgage, combined family income, 50 grand, and she's concerned about being a burden to her family, all right? That is a strong point that you need to bring up about final expense, all right? I don't typically like to use the scare tactics of, hey, don't dump all this on your kids. But for me, when I talk to people, it's, hey, what I do with my friends and family as well as my clients at this point is I talk to you about what planning you've done around final expenses. Then stop talking. Let them talk to you about what they've planned for, or maybe what they haven't planned for, what they thought of, maybe what they haven't thought of. Give them the sense of control. I like the term planning because it gives them a sense of control, because it's absolutely true that if they make some plans around this, that they have control over what happens later in life, right? I don't like the threats. That's just me. That's just my personality. I think that if you put a client in a more positive environment, that tends to help with your sales. So for me, it's like, hey, again, this is part of my process. When I work with people, this is what I do. At this point, I'm going to talk to you about final expenses. What planning have you done around it? That sets the tone for a healthy conversation, and I like that. But getting back to my friend Maya here, okay? Again, 63 years old. She's probably thinking about it, and this is time to have a good conversation with her. So what does she have? There are 2 kind of options with our final expense, right? One of them is the level plan. The other one is the graded plan, right? Here's what it looks like. Level plan, ages 45 to 85, 2,000 to 50,000, tobacco and non-tobacco ratings. Graded plan is 45 to 80, face amounts of 2,000 to 20,000, and it's just a standard rating. Here's the difference between the 2, and this is literally the only thing you need to know. Level plan means your client is relatively healthy and we're comfortable with the risk. If they pass away, they're eligible for their full death benefit immediately. So if you write the policy today, they pass away tomorrow, we're going to give them a check for whatever the death benefit, the full death benefit amount is. Graded. Graded means they got some relatively serious health issues. So rather than decline them, we're going to offer them the grade and put them on the graded plan. The graded means that if they pass away within the first 2 years, they're going to be given back all their premiums plus 10%. After that 2-year period, they're eligible for the full death benefit. So if you think about it, the graded is kind of like a 2-year pause, right? Rather than decline the group of people that have some pretty serious health issues, we're going to say, hey, you know what? We can't offer you the level, but we can offer you the graded, right? Because you have some health issues. And let's be realistic. Your folks know they have health issues, right? And I ask this question all the time. I always ask my agents, I'm like, hey, do you think your clients lie to you about their health? And in my brain, I have to giggle because most people say yes. No, they don't. They don't lie to you. You have a small percentage that may lie to you and try to get over on it. But look, we're a massive insurance company. We're going to know what we're writing, right? We're not going to guess at things. Most good insurance companies do the same thing. We're going to be certain of the risk before we write it, okay? So when we're looking at these things, we're going to make sure it's what we want and we understand it. So what I would tell you is anytime you're talking to your clients, say this to them. This is an important thing for you to say to your clients. Hey, at this point, I'm going to talk to you about your health. Now, even if you think it doesn't matter, and even if you think it was so long ago, it's not going to make a difference, I need to know everything. That way I can put the right resources in front of you. If you say that, then no matter what happens, it doesn't matter. The worst thing you can do is do a poor job of the medical history, get declined, and then you come back to your client and say, hey, you were declined. That sounds like you're breaking up and they'll never work with you again. But if you set it up with, hey, I need to know everything, then if they didn't disclose something or something was missed, then you can come back and go, hey, remember when we talked about your health history? I think we missed something. What did we miss together, right? So then it's a better discussion and it's a little bit healthier. So I always say that. It's like your get out of jail free card, right? Hey, I need to know everything. And you got to do more than just their height and weight. Talk to them about their medications. If they have some kind of medications, what was it for? When was it prescribed? What was it prescribed for? Go down the rabbit hole with them. You need to do that, right? It's healthier for your business. It's better for your client because then you understand the risk better. But again, that's what you're looking at. Level plan means your client's relatively healthy. They're eligible for the full death benefit from day one. Graded plan means we're not really digging their health or something maybe a little bit off that makes them a little bit higher risk, but we want to make sure that we issue them something. So graded plan, there's a 2-year pause. If they pass away within the first 2 years, they're refunded all their premiums plus 10%. After the 2 years, they're eligible for the full death benefit, right? Easy enough. Here's what it looks like for her, right? Her living promise solution. Again, she's 63, female, non-smoker, healthy enough to qualify for the level benefit plan. Death benefits $12,000. Monthly premiums $44.62. How do you figure out the death benefit? Well, you take into account what the average cost of a funeral is. $8 to $12,000, 8 to 15, somewhere in there is realistic, depending on how fancy you want to get. Now, remember, you can go up as high as 50. So maybe Maya wants to make sure that not only can she pay for her final expenses, but there's a little bit extra left for the family at the end of it. Okay, great. That's part of the discussion. But for her, she just wanted to make sure that she had this taken care of. Cool. $12,000. It's $44.62. There's some built-in riders that are no-cost riders that are automatically part of this, right? Death benefit for terminal illness, accelerated death benefit for nursing home, okay? Additional cost riders. You can get an accidental death benefit on this one, which equals the death benefit, right, for $3.87 a month. So let's take a look at what Maya has. Policy pays the death benefit to the insured at age 100. If they make it to the age of 100, we're going to pay it out. If they pass away sometime before that, obviously they get the full death benefit, right? They have access to the funds early if they're diagnosed with terminal illness or confined to a nursing home. There are some state variability to that, so log into mutualofomaha.com/simple, take a peek at that. California is usually the oddball one there. Nothing horrible, but it is things that you do need to know about if you're talking to your client in California. If you have the accidental death benefit, it essentially doubles the death benefit for your client. All right. Again, we're going back to Maya. That's final expense, guys. It's as easy as that. And I want you to keep it simple. Don't overcomplicate this stuff with your clients. If you've ever talked to a client, and we have this really weird thing in this industry that we think we need to educate your clients, educate your clients, educate your clients. What I would tell you is stop doing that all the time. Yeah, it is your job to educate your clients to some extent, but really, isn't it your job to figure out solutions or point out holes in their protection plan, right? That's more your job. You don't need them to turn them into you. What I will tell you is that if you've ever had a discussion with a client and they say, hey, Kurt, this is great information, I'll get back with you, and you never hear from them again, I guarantee you went too far and you confused them. You went too far and you confused them. What you need to do is provide them solutions, right? Not explain to them the inner workings of life insurance. So we're talking about Maya again, right? We helped her with the final expense. We got her covered on that. She has 3 children, 2 grandchildren. All right. Now let's think about that for a minute. I'm 57. If you're talking to me about insurance, any kind of insurance, you better talk to me about my kids and grandkids. Why? Well, I'm about to show you. That's what's going to go through my mind, right? Again, you're putting me in a positive space. That is my first grandson, Caden, with my amazing daughter, Taylor, and the okay husband now, Jordan. I say okay, I share the story because to me it's comical. When he first started dating my daughter, he pulled up in the driveway and honked his horn. For those of you that don't know me, I spent 10 years in the Marines and I don't take that lightly. So my wife looked at me and just said, Dave, don't kill him. So I went outside and I educated him on, hey, you need to come in and visit my daughter if you're gonna date her. All right. So that story aside, if you're talking to me about my final expenses, you better say, hey, do you have kids or grandkids? And if and when they say yes, you say, tell me about them. Again, it puts them in that very positive emotional environment. They're going to be more receptive to what you're talking about if you do that. Here's the other thing. Look at that goofball. That's grandson number 2. That's Carter, right? So what's going through my head as you're talking to me about this is exactly these things. And anytime I do this presentation in person, every single person out there goes, oh, which is what I love. I love to hear that because that tells me that people have a heart. And I know in general that they do, right? So for me, if you ask me about my kids and grandkids and I get a little worked up, even when I do this presentation about them, cool, I want to do something for them. Hey, Kurt, we've taken care of your final expense. What if you could do something for your grandkids? Absolutely, right? Look at those knuckleheads. Love them. Here's what you do. That's when you roll into Children's Whole Life. That's when you set up the second product in the Simplified issue portfolio. Issue ages 14 days old up to 17 years old. What kind of underwriting happens on a 14-day-old? Not much, right? Face amounts, $5,000 to $50,000. There's no medical exam. There's 2 health questions. 2, I'll show them to you in a second. Grandparents can sign the application without the parent's signature. We're not trying to get around parents and parental control, but we're acknowledging the fact that families are all over the place, and sometimes grandparents want to do something cool for their grandkids, all right? Yes, it's a whole life policy, so it does build some cash value. Coverage is guaranteed to age 100 as long as they pay the premiums. I'm going to get into the guaranteed insurability rider and the waiver of premium here in a second. But what I want to tell you is when you're talking to the grandparents and parents about Children's Whole Life, your focus is not on the death benefit. Don't put me in this highly emotional state where I just shared pictures and stories about my kids and grandkids and then tell me you're going to kill them with a death benefit. That's not what you do. Does it have a death benefit? Yes, it does, in case something horrible happens. But what is the real purpose of a Children's Whole Life policy? The real purpose of the Children's Whole Life policy is to guarantee the insurability of the grandkid, because what you can tell them then is, hey, your kid or grandkid has the ability to up their coverage up to and equal to the original face amount 5 different times in their life. All right, so let's do some quick math. If they start out with $50,000 and they execute this 5 more times, when they get married, when they purchase their first home, when they have a child by birth or adoption, their 25th, 30th, 35th, or 40th birthday, right? There's 7 instances there. They can pick 5 of them. So if they started off with 50,000 and they executed it 5 more times at 50,000 each, you've turned a $50,000 policy into a $300,000 policy, and they never had to undergo any underwriting. It's absolutely killer for you guys. All right, keep that in mind. Death benefit in this instance, right? Maya said, hey, you know what? Let's do $25,000 per grandkid. We have Mason, who's a 9-year-old male, Elena, who's a 7-year-old female, $12.08 for either one of them. Total monthly premium for both of them, since Maya would like to pay for this, is $24.16, right? The guaranteed insurability rider is exactly what I was just talking to you about, right? That is, you are guaranteed to be insured if you want to execute that 5 out of the 7 times that I told you. And again, the 7 times that you can pick from are when you get married, purchase of a home, having a child, birth or adoption, 25th, 30th, 35th, or 40th birthday. 7 different instances, they can pick 5. Waiver of premium due to death of the owner, okay? Grandparents, if they pass away, while this policy is in force, right? Say they were paying them. We give them a 90-day waiver, or the family, a 90-day waiver of premiums due in order for somebody to pick up the premiums on this policy, whether maybe the kid is now old enough to start paying for them, or a parent or somebody else, right? So there's a 90-day, 3 months, right, worth of time to allow people to kind of figure out what they want to do with it. Those are built in. They don't cost anything. It's killer. It's a great thing to do, right? So here's what we're looking at already. Living Promise, which is the final expense solution for Maya. $12,000 death benefit, $48.49. 2 grandkids covered, 25 grand each, $24.16, right? For less than 75 bucks a month, $72.65. She's protected her family from what happens when she passes away, and she's also helped put a foundational piece of insurance on both of her grandkids. That's something special, guys, something to keep in mind. And literally super easy, right? Super easy. There's 2 health questions on this. If they have 10 grandkids, you can put them all on the same application. You can put them all on the same application. They'll obviously be issued their own individual policies, but you could put all the kids or all the grandkids on the same damn application, right? It doesn't get any easier than that. And you've talked about 2 things that are absolutely foundational and critical and part of a conversation that everybody, whether they know it or not, should be having. So again, going back to what I said in the beginning, if you talk to them about planning, having some control over what happens next, hey, working with you, my process involves this. What planning have you done around that already? Let's talk about it, right? That is a critical component and a foundational, 2 pieces of foundational insurance for anything, all right? So let's talk about Amelia, 33-year-old, married, 2 kids, $250,000 mortgage, combined family income of about $150,000. All right, cool. What can or should we be looking at for Amelia? All right, okay, we kind of did our fact finder. We know he's got a mortgage. We know he wants to protect his family, wife and 2 kids. What else is he looking for? Save for the future? Sure, who isn't? Retire comfortably? Yeah, everybody wants that, right? But as part of your process, you should be talking to them about what is it they want to do, or what is it they want their insurance to do for them, right? What concerns do you have about the future? What does your retirement look like? There's a number of questions that you guys should be asking your clients to kind of set up these things. These are just a few. Term Life Express. Everybody knows term. Term insurance, been around forever, super easy, nothing crazy about it. Issue ages for our Term Life Express are 18 to age 75. Face amounts, 25 to 300,000 between the ages of 18 and 50, 25 to 250,000 between the ages of 51 and 60, 25 to 150,000 ages 61 to 75. You have a 10-year, 15-year, 20-year, and 30-year, okay? Now, why do we have age bands? Well, the older you are, the higher the risk. So if you want more coverage than what's in these age bands, you need to go to fully underwritten, which means you're going to undergo a physical, you're going to do a urinalysis, blood work, and all those kind of things. Not hard, not tricky, but we as an insurance company need to know more the older people get with term, so we understand the risk better. That's why we have these different age bands in here. Still killer, still covers the majority of people out there that you're going to run across. And again, they'll never have to set foot in a doctor's office. It's literally, you're going to fill out the application. We're going to pull a bunch of data from the cloud and some of the other sources we have and make a decision on the spot, right? Built-in riders, living benefits. You guys have probably all heard about that. Accelerated death benefit rider for terminal, chronic, and critical illness. What's that mean? It means your client has the ability to access a significant portion of their death benefit if they have a terminal, chronic, or critical illness. Waiver of premium for unemployment should they be unemployed, and they can demonstrate that. We'll give them a 90-day waiver. Residential waiver, damage waiver of premium. If their main house has been damaged more than $20,000, we'll waive the premium for up to 90 days. Common carrier death benefit provision. That means if they get killed on a plane, train, automobile, commercial travel, will essentially double their death benefit, right? Those are that one is very common. The majority of carriers have that because that's an easy one. But the one I want you guys to really notice, and that's exactly the way that I explain it, living benefits, terminal, chronic, critical illness. What does that mean? It means you have the ability to access a significant portion of your death benefit should you have one of those, right? Term's easy. Term's super easy. You hear it. I mean, there's no shortage of people who spout off that everybody, Dave Ramsey, right? Buy term, invest the rest. Okay, cool. Thanks, Dave. Appreciate you putting term out there for me. What I would say is that, yeah, that kind of advice is pretty decent, but I think Dave's missing the point that there's a deeper conversation to be had. Maybe there's more than just term, but at the very least, your clients understand term insurance. Makes a lot of sense. Here's what it looks like for Emilio. $250,000 death benefit, 30 years, right? That means for 30 years, that premium does not change. $250,000, $69.87, right? So he's 33. That's a tax-free death benefit until he turns 63. At the age of 63, it goes away. There's a lot of conversion options with this. The conversion options with our Term Life Express are killer, okay? You have the ability to convert some or all of a portion of that to either a standalone whole life policy, or here's the really cool kicker, or you can convert it into an IUL Express. Very few carriers have that, and that is supremely important for you to know, because anytime I have a conversation about term anything, I'm telling my client, hey, by the way, at some point we're going to talk about converting some or all of this to a permanent policy. Just so you know, you need to plant that seed with your client the minute you sell this. And I don't care what they say. And this is what I did in my practice. I wasn't a one and done guy, right? I wanted a relationship with my client. And I'll give you a good example of that. If you just sold me a term policy, you went on your merry way, here's what you would have missed. You would have missed me getting married, so you could have covered my spouse. You would have missed me starting one of my 3 businesses, so there would have been me, my business partners along the way that you could have got. You would have missed my daughter. You would have missed my 2 grandkids. You would have missed my son-in-law. You would have missed all their friends, because literally all you would have had to do is ask for referrals. So what I would tell you is, when you set up a policy and you sell that, you do not give your client the option to not meet with you again. You follow up with them yearly. Hey, what I typically do with my friends and family, as well as my clients, is I'm going to set up a time for you and I to meet. Now, I have some clients that I meet with once a quarter. I have some clients that I meet with once a year. Where do you fall in that? Do not give them the option of not meeting with you. You're going to miss out on so much if you do that, and you'll miss out on so many easy referrals. Do not give them the option. It's, hey, at a minimum, we're meeting once a year, right? If you want to meet more than that, cool. But don't give them the option of not meeting with you. You're going to miss out on too much, because that also, if you set the idea up, hey, we're going to talk about converting some of this, then every time you meet with them, you bring that up, and you also ask them what else changed, right? A lot of important stuff there. Keep it easy. Okay, we talked about Living Promise, our final expense policy. We talked about Children's Whole Life. We talked about term. Keeping it easy here, guys. IUL Express. I love this. IULs in the industry, I would say, for the most part, agents either don't understand or they don't explain them correctly, right? They overcomplicate them. We like to talk about all the inner workings of this stuff, and what your client hears is complex. And then what that makes them feel is it's costly because it's complex, all right? None of that's true. If you can't explain how an IUL works in 2 sentences, you need to rethink what you're doing, right? You literally need to rethink what you're doing. Here's how an IUL works, and this is true of every IUL out there. Every time your client makes a premium payment, a portion goes toward the death benefit, the other portion goes toward an accumulation bucket. That accumulation bucket allows you options down the road. Stop talking. That's all you have to do. That is how you explain an IUL. I'll say it one more time, because I want everybody to burn this in their brain, because we get into the depths of it right away, and that really overcomplicates things with your clients, and it doesn't need to be. Your job isn't to teach them to be insurance or product pros. Your job is to teach them solution. Hey, why are we talking about an IUL? Well, it's a form of permanent insurance. Every time you make a premium payment, a portion goes toward your death benefit. The other portion goes toward an accumulation bucket that you can use. That's it. Make it easy on yourselves, guys. IUL Express, guaranteed coverage for 20 years. We're going to come back to that, because right there, that ought to be setting off alarm bells in your brain. You're going, hey, wait a minute, Kurt, you said this was permanent coverage. Yeah, it is. The ability to have coverage to age 120, built-in features, living benefits. They have the ability to access a significant portion of their death benefit for chronic critical, and terminal illnesses, just like the Term Life Express, right? Competitive cash value accumulation. This is the accumulation bucket that I was talking about, based off of the S&P 500. It's not invested in the stock market. We benchmark against it, meaning that we can help your clients experience all the highs of the growing S&P 500, but they're protected from the lows, right? Exact same underwriting as a Term Life Express. Let's go back up to that top portion where it says guaranteed coverage for 20 years. What does that mean? Why is that different? Going back to the whole thing, every time your client makes a premium payment, right? Portion goes toward the death benefit, the other portion goes toward the accumulation bucket. What if the accumulation bucket never works? Okay, that means they're going to be guaranteed to have coverage out to the age of 80. So they'll get at least 20 years of coverage. That means the S&P 500 would have to tank continually for that to ever happen. Has that happened in the history of our country? No, it has not. No, it has not. The reality is that these policies, especially when you choose Easy Solve, are designed for your clients to have this take them out to the age of 120. I don't see anybody that you cover making that age. Maybe you do, but if they do make it to that age, they'll get paid out, all right? So keep that in mind. The idea behind that is that we are using the accumulation to help keep this policy in force long-term, taking advantage of the financial engine of the United States, right? Here's the cool thing. Let's go back to 2008. Some of you may not remember this. I cried when I looked at my 401k that year. I took an absolute dump in that. It lost 38% of its value, right? The cash accumulation inside of an IUL at that time would have lost zero money. Why? Because we benchmark against it, meaning that they will never have a negative in the accumulation. They will experience the positives of it, right? That's the good part. The insurance company takes all the risk on the accumulation. That's an important thing for you to understand. It's called zeros you're here. You guys probably have heard that adage at some point, but that's exactly how it works, all right? And again, you cannot lose money due to the market going down, right? The accumulation value is not actually invested in the stock market. We just view it, okay, hey, what was the S&P 500 at this point this year? What was it at this point next year, right? If it grew X amount, okay, we'll credit it accordingly. Your clients participate in the market upside without the downside risk. That's the cool thing about an IUL. Guys, again, nothing crazy. Go to mutualofomaha.com/simple, okay? I want you to go to that simplified site, go look at the IUL Express. There is a short training video for you. There's also a video that is client facing that does a really, really good job of explaining. I'd encourage you to watch both. They're 6-8 minutes a piece, something like that. That gives you some really good verbiage into explaining the why you are recommending an IUL. It's good stuff. So here's what it looks like for Emilio. Instead of going term, he wanted to go permanent. Cool. Death benefit of $250,000, monthly premium of $122.29. Easy solve option, indexing strategy. Don't get wrapped up too much in the indexing strategy. There's a number of them that you can choose from, but what I would tell you is if you're doing an IUL Express, just choose Easy Solve. Let the system do the rest for you. Then you don't have to make all these decisions. Again, indexing strategy. Do you have the ability to customize this and do all this great stuff with an IUL Express? Yeah, you do. Should you? Probably not. It's not the place for you to get super creative. Let the system work for you. You're using the IUL Express because you want an IUL for your client done quickly and easily without you having to mess around doing illustrations. Pick the Easy Solve, let the system do it for you. Easy Solve solution, 1 year, 100% participation. It's got all those built-in riders that we talked about before. Here's what it looks like, right? Average return on our IULs is somewhere around 6.5%. So the guaranteed amount is to age 59 in his instance. What does that mean? That means that if the S&P 500 never returns anything, it will last at least that long. If it averages a return of 2.75, it will last until the age of 82. If it has an average rate of 5.8, it will last until the age of 120. Average crediting for IRULs, and here's the cool thing. You can go on to our website there and look at it, and you can look at historical crediting. It's somewhere around 6.5%. So our strategy is rock solid with this. We know how to keep policies long term. It's important. All right. You can take out tax loans and withdrawals from your policies. And when you see that term resulting in tax advantage income stream, I like the word tax advantage. It means tax free, right? If you take out a loan against a policy, it's as long as it is still in force. Those are generally tax. I don't like the word tax free because you're not a tax expert, but I like tax advantage. Again, the living benefits, terminal, chronic, critical illness. You can see what the difference is, right? Terminal, 12 months or less to live. Chronic illness means you're unable to perform 2 of the 6 ADLs. Critical, that usually has to do with major organ failure, heart attack, kidney stroke, and all those kind of things. Again, your client has the ability to access a significant portion of their death benefit with our IUL Express and our Term Life Express if they have terminal, chronic, critical illnesses. That's a cool thing. So here's what it looks like for them. Again, we talked about $122.29 for $250,000 worth of coverage, and literally one of the only IULs that can get issued same day. Super cool. Guys, here's our simplified issue portfolio in total. We talked about the core 4, which is Children's Whole Life, IUL Express, Term Life Express, Living Promise. Yeah, you have access to the Guaranteed Advantage. Yeah, you have access to the cancer, heart attack, and stroke plans, the Critical Advantage, and the Guaranteed Advantage. But again, the 4 core that need to make up kind of the foundational part of any practice should be those, right? They all tie together. There's many rationales down the road for you maybe doing some type of permanent insurance and term insurance blend, right? There's instances for you to be doing that. But again, keep it easy on yourself. If you're using simplified issue, it's meant to be simple. So do that, right? And again, going back to some of the stuff that I told you before, and I talk to my clients still to this day, and I use the same verbiage. Hey, what I do at this point in time with my friends and family as well as my clients. Why do I say that? I say that because what your clients hear is that they're part of your close crew. And every client wants that, right? It sounds like personal attention. And again, it puts them in that positive state, which is exactly what you want. What I do at this point with my friends and family as well as my clients, I'm going to talk to you about X, Y, Z, whatever, right? That's the easiest way to roll through it. You have a solid partner in Mutual of Omaha. You'd be hard pressed to find anybody who doesn't know who the heck we are, right? You'd be hard pressed to find that. Most people, if you say, hey, you know what? I work with a couple of great carriers like Mutual of Omaha. Have you heard of them? Oh yeah, they got the TV show, right? And we have the Mutual of Omaha's Wild Kingdom for 30 some odd years. We brought it back like 4 years ago. It's won 5 daytime Emmys, so it's still around 9 o'clock, I think, on Saturdays. So it's absolutely still around. Keep that in your hip pocket, right? Having Mutual of Omaha, 115-year-old carrier, A+ or better rated, that's a good partner to have in your pocket. Let's talk about the submissions process real quick, guys. This is important for you. Now, we kind of talked about your clients and whether or not they're being completely honest with you about their health. Again, what I would tell you is that the majority of the time, they are being honest with you. They just are guilty of filtering. Either you didn't ask the question or they think it didn't matter. So again, going back to what I told you, make sure you tell your clients, hey, I need to know everything, even if you think it doesn't matter. As you're going through, this is built into our EAP process, and this is really cool. I wish this would have been around. If you do your homework and you pay attention to this pre-qualification process that's built into the app system, you should never get a decline from Mutual of Omaha for simplified issue products. Ever. You'll know already with a very high likelihood of whether or not you should even be submitting a policy to us. As part of the process, it's going to look like this, the pre-approval screen, right? As you're filling out this information, you get the HIPAA signature, it's going to lock the data and all this fun stuff. It'll come back to you and say, hey, your client is trending favorable or your client is trending not favorable. That's the 2 indicators on the IUL Express and Term Life Express. Again, green is good, favorable. That means there's a high likelihood that this thing goes through. Not favorable. If you see not favorable, the reason's in red, red is dead. Do not submit it. If you get a not favorable indicator on this, stop what you're doing. Don't even submit it. It 100% will be declined, right? Don't think that, hey, I'll just take a shot at it. Go back and talk to your clients. Something is showing up that's telling us that their health is not good enough to go down the simplified issue path. All right, keep that in mind. Favorable, green is good. Not favorable, red is dead. Keep that in mind. That's the 2 indicators for IUL Express and Term Life Express. What does it look like for Living Promise? Remember, I told you there's 2 options in Living Promise, level and graded. Level, your clients are eligible for the death benefit from day 1. Graded means there's essentially a 2-year pause. If they pass away within the first 2 years, we're going to refund all their money plus 10%. After that, they're eligible for the full death benefit. So as you're filling this out, it will say favorable level, favorable graded, or not favorable. Again, if it says level or graded, go ahead and move along with what you're doing. If it says not favorable, stop. Stop what you're doing. Do not submit it. There's zero chance that this gets by. Now, what I will tell you is, can you have it say favorable and then you end up submitting it and it gets declined? Yes. How does that happen? A small 3.26% of the time, what happens is you marked something on the actual application that was a knockout question. We didn't pick up any data on this, but it doesn't correlate the two until you get to the end. What I will tell you is, if it says favorable and you get to the end, right before you hit submit, go up to the upper right-hand corner. There's a little box that looks like a PDF symbol. You want to hit that. And I would encourage you to do this with every carrier, no matter who it is, and look at the actual application that's going to go in front of an underwriter or go into the system. What you may see is that, hey, this person answered yes to this question. Well, at the top of that column, it may say something along the lines of, hey, if your client answers yes to questions 2 through 7, they are not eligible for coverage, right? So if we're looking at some general data in the beginning that says, hey, this is trending favorable, and you marked yes to a knockout question, it could get declined. That's what I'm telling you. Use this as a guide. It's extremely accurate and it's super important. But at the end of the day, I want you to just caution yourself that you should always review whatever you're putting together for your client's sake. Don't just slap together an application, right? Don't be sloppy with it. We pick up on sloppy work and you don't want to be known for that. Do your work properly. So review your applications before you submit it. I know you guys are trained that way because Jim and I talk about it all the time, right? You're trained to do this properly. That's exactly what you should do. Take your time, ask your client the questions exactly as they are written on the application. Don't get creative and try to explain them. Hey, I'm going to ask you some questions. Just give me a yes or no. That's all you have to tell your client. Don't try to decipher the questions that are in there. They're not that tricky and it doesn't need your commentary. Don't overcomplicate it, guys. So use this as an indicator, and then again, review your application before you ever submit it. You'll have a very high likelihood of it working out. Okay. Again, if it says not favorable, stop what you're doing. Go back and talk to your client. Right? You're missing something along the way. Guys, there's me and Cindy. All right. My phone number, my email address, Cindy's phone number, Cindy's email address. Again, you have an insanely talented group at Western Marketing. Jim's been at this just as long as I have. He's just as talented as I am. You have a number of managers out there who are really good. But if you need additional things, or if you're looking for additional trainings, obviously hit up Western. But Cindy and I are here to back up your work as well. Always important that Cindy and I are able to support what you do because we take it to heart. We've both been in this business a long time, and we want to make sure that we're supporting you accordingly. Guys, that's what I have for this presentation. I wanted to keep it real simple and easy. Again, I'd encourage all of you, www.mutualofomaha.com/simple. Go take a peek at that. There's some really good info out there for you.
All right. Well, thank you, Kurt. Thank you, Cindy. Folks, I know Kurt did a great job in the presentation, but now's the time to ask questions if you have any. And so while we're waiting for questions, I just want to go over a couple things for your knowledge. First of all, this webinar has been recorded. You'll get a copy of it. So don't stress if you logged in a minute late or anything. We'll get you a copy of the webinar as well. Obviously, he touched on the beauty of the product suite that they have, right? They have simplified issue products for pretty much anybody, regardless of their health condition, because stuff also, age, they go up to 89 in some cases, really 85 for the life. So keep that in mind. Real excited that they have that customer facing piece for the IUL that Kurt brought up. I strongly suggest that you look at that, and if you have questions or need some help explaining IULs to your clients, that you leverage the tool that Mutual of Omaha has built for you. And there's not a better name out in the industry. Kurt brought it up a little bit, but I've been in this industry for a long time. I've sat with clients when I was an agent or had my agency, and never once when I brought up Mutual of Omaha did I have a client say, "Who's that?" So it just gives your clients peace of mind, right? Assuming everything else is close or equal, the Mutual of Omaha name is going to carry an advantage for you when you're talking to your clients. So make sure and utilize that. And then also, how great is that simplified issue underwriting, that the red light, green light on the term and the IUL, as well as the kind of the red light, yellow, green on the final expense. Please heed Kurt's warning. If it's unfavorable, stop. Not only is that going to save you and your client some time, but it's also going to not have your client have a decline of life insurance on their insurance bureau's report. That's a big deal. That could be the difference between them being insurable in the near future or not. So don't waste your time, your client's time. Don't put your clients in a bad situation by moving forward and submitting what should be or what you're being told is an unfavorable underwriting decision. With that said, we do have a question or two, so let me get in there. Okay, let me see. This one is, let me just break this out so I can read it. Sorry. Okay, Louis, we'll follow up with you. It's a question on second year comp. I'll follow up with you individually or your marketer here from Western Marketing will to have that. Guys, any comp questions we're happy to ask. We just don't get into things in a webinar. So Louis, expect somebody from either myself or somebody from my team to follow up with you on that. There looks like a question really quick, Kurt, about the IUL Express and the Term Express. You know, can you quickly, like elevator pitch, why you would use one over the other with a client?
Yeah, and that's a really good question, and this is kind of where a lot of agents get confused. Now, going back to your approach and you're identifying the needs or the concerns, right? A lot of people use the old DIME, right? Debt, income, mortgage, education, and identifying things. You have some temporary or time-bound expenses, right? A mortgage, you know, that's usually 20 to 30 years, depending on how long they've been paying on it and stuff like that. And then you have some expenses that are longer term. So what you can do in many cases is identify, okay, what's the serious things that we need to make sure that are covered, that are time bound. So say you're meeting with a client and they say, hey, well, you know, I have this house, I got about $250,000 left on my mortgage. Cool. How long have you been paying on it? Well, I got a 30-year mortgage. I've been paying on it for 10 years. Good. Okay. That expense doesn't sound like it needs a 30-year term. Sounds like it needs a 20-year term because you're covering a time-bound kind of, and not really a problem, but a time-bound concern, right? Or an expense. The other portion of that could be of, okay, I have somebody who is getting toward the end of their working years, right? Maybe you're meeting with somebody like me. I'm 57. How many more years of work? Well, hopefully not that damn many, but maybe you don't need to cover 30 years of my salary. Maybe you only need to cover the time period from now until I retire. Okay, well, that sounds like if Kurt passes away and I want to look at replacing his income, that sounds like, since he wants to retire at the age of 67 or whatever, that sounds like maybe a 10-year term, right? So a lot of it is time-bound expenses and the other ones are permanent, right? Now keep in mind, for me, younger clients, I will generally try and steer toward permanent because number one, it's cheaper for them, and number two, they have the power of time, right? They have a long time for these things to function correctly. So again, it kind of goes back to your fact finding in what expenses or concerns are you covering, and are they bound by time or are they not? Or here's another thing that you need to consider, right? And I say this to every client. Why are we meeting today? What is it that you want your insurance to do for you, right? I want them to explain to me what they think, then I can also come back with, hey, you know what? You can utilize permanent insurance in this fashion. And specifically, I'm talking about an IUL. The way you can use permanent insurance is, yeah, it will cover you for whatever amount that we decide on for that for, long term, but you can also borrow against it. So maybe you have the coverage in place for, say, 20, 30 years, and then you want to start drawing some money out of it and have that as an income stream. Can you do that? Yeah. So maybe it becomes a conversation of, do you want to look at something that maybe could create an income stream that is tax advantaged down the road? There is a way to utilize life insurance for that. So again, think about it in terms of time bound and permanency of ideas and solutions. Hopefully that makes a little bit of sense, but that's part of the conversation of which one of these things equates to some kind of time component and which one of these kind of sounds like more of a permanent.
Yeah, no, perfect, Kurt. And for those of you out there that are newer into writing life insurance, the other thing I would say is just lean on our team here at Western Marketing. Get as much information as you can about your client, what their goals are, etc. And we're happy to help you build like a product profile or recommend products. Mutual of Omaha is our top life insurance carrier, so don't be surprised if they're in the recommendation mix, but that was a great question. So it does look like that's the end of the questions. So just going to finish with this, for all you spending the time on the call, thank you very much. It's not lost on the team at Mutual of Omaha or me that when you're here on a webinar, you aren't out at appointments, you aren't putting food on your table and paying your bills. So thank you for that. If you do need additional help, have additional questions, feel free to call us. Our office number is 1-800-852-7152. Again, 800-852-7152. My name again is Jim Codney. I'm the National Sales Director here. If you're working with anybody else, you're welcome to just ask for your marketer and we'll be happy to help you. So with that, thanks a lot, everybody, and make it a great day. Take care.
Thank you.